Did you know over 2/3 of Americans aren't able to go to their own bank and get a personal loan due to their low credit score? Now, as banks have closed off traditional pathways to access credit, many Americans are forced to use other options, including those predatory payday loans. Now, here to discuss how financial technology is actually working to transform this industry and really serve this underserved group is Elevate CEO Ken Rees. Ken, thanks so much for being with us.
Oh, well, thanks for having me.
Well, over these years, what has really changed? Why are we kind of going from the banks being the place we go to these other options?
Well, this country's changed. When I grew up, we had a thriving middle class with savings and financial stability. But now, almost half of Americans have less than $400 in savings. And 2/3 of Americans, 160 million American adults, have a credit score that's less than 700. So this new middle class is no longer well served by banks, and instead, they're being pushed into dead-end products like payday loans, title loans, pawn and storefront installment loans. And we think that Americans deserve better options.
So I did say that we're going to talk about some positive progression with all of that. What is technology doing to kind of, like I said, swing it the other direction?
Well, I mean, customers today are facing so many financial pressures. You think about the person that doesn't have savings, doesn't have a lot of credit options, and instead, when their car breaks down and they need to take their child to the doctor, they have to go to a dead-end product and spend a lot of money. Our products from Elevate, we've now originated $5.5 billion worth of credit to 2 million Americans and saved them $3 billion over what they would have spent on payday loans, partly because of our investments in technology and advanced analytics allow us to serve them better than traditional providers.
So we're looking for those better options than those payday loans. And of course, that's what we're all looking for. How are we kind of doing that with startups and other things?
Well, some of the things that we're doing with our technology and advanced analytics are providing better solutions. But we think what's really exciting is when fintech innovators like us can start partnering with banks, because banks have such great advantages. They have low cost of capital, they already have relationships with customers, but they don't know how to serve those customers. They don't have the analytics to do it. So by partnering, we think we can get banks back in the business of serving their customers again, saying yes to the new middle class that they've been pushing out of the branches, and giving them a new generation of more responsible technology-enabled credit products.
Well, we love to hear, a light that we can, kind of head towards and get some help. Is there anything else we can do to kind of, combat these predatory loans, or somewhere we can go online to get some more information?
Well, yeah, the regulatory, changes can help, but really it's going to take innovation, and it's going to take regulators and legislators helping banks get comfortable serving their customers again and partnering with fintech providers. And our website, elevate.com, is a great place to learn more about this big problem. It covers some of the products we offer, but also research into the unique needs of so many Americans who are looking for better credit options.
Well, I really think, Ken, that all that we've talked about this morning is really going to hit home with a lot of people, like you said, with those stats off the top. So thank you so much.
Thank you. Enjoyed it.
We'll be right back.